June quarter wage growth numbers will be released shortly by the Bureau of Stats. Let's go live to our business reporter, Ed Boyd. Ed, economists are predicting wages will increase at an annual rate of 4%. So we're watching this number pretty closely as to whether or not it comes in higher or lower, and then everyone will have their interpretations as to what that means.
Yeah, look, this is a pretty critical figure, Kieran, especially for the Reserve Bank of Australia, which has kept interest rates elevated at 4.35% now for almost 12 months. Obviously, if today's figure comes in a bit higher than expected, it means Australians will have a bit more money in their bank accounts each month or whenever they get paid, and in theory, potentially spend that money in the economy. Look, the numbers are about to drop. They've just dropped. We've seen wages increase at an annual rate slightly higher than expected of 4.1%. The market was expecting 4%. So wages have accelerated a little bit more than anticipated. On a quarterly basis, though, over the 3 months to June 30, wages have increased by 0.8%. And that's actually below what the market was expecting for the quarterly number. They were expecting a 0.9% increase. This chart really shows you wage price index going back to 2018. You can see it was basically 2% annual wage growth for quite a few years. During COVID, it obviously dropped down to in the 1% levels, but it started to accelerate. Now, March quarter wage growth at an annual rate was 4.1%. So it has remained stable at that 4.1% figure in the June quarter. Look, let me just bring up the Bureau of Statistics website to get a few more details for you. But basically, today's numbers should confirm that obviously it's good news for Australians to get a pay rise, but at the same time, there are difficulties that we're experiencing right now with inflation, with the economy where it's at. So inflation, if you remember, during the June quarter was 3.8% at an annualised rate. We've now seen wages about 0.3% above inflation. So in real terms, Australians have been getting real-term pay rises. Looking at the stats here, it says private sector wages grew by 0.7% in the June quarter, down from 0.9% in the March quarter. Public wages grow 0.9%. They actually increased from 0.6% in the March quarter. Basically, what we're looking at here is a bit of an acceleration in wages, a little bit higher than what the market was expecting. Annual wage growth in the private sector was 4.1% in the June quarter, following 3 consecutive quarters at 4.2%. So, look, these figures are pretty important, Kieran. We should also have a ASX 200 live chart, which we can hopefully put up on the screen, just showing the immediate reaction to the numbers. The market was flat before the figures came out, Kieran, and it looks like it is remaining flat as well. So reading into this, it seems like the stock market and investors, people that bet on interest rates, seem to believe here that this figure is not going to cause the Reserve Bank to have any serious implications or concerns about escalating inflation. Because remember, last year, the big issue was what a lot of politicians and economists started calling the wage price spiral. That's the theory that when wages go up, people spend that money in the economy, and then inflation goes up as well. And then you're caught in this cycle with rising wages and rising inflation at the same time. And that's obviously something the Reserve Bank has been trying to avoid. And so far, we have avoided that. So today's numbers, a little bit higher on an annual rate than expected, but on a quarterly rate, they were lower. So I think the market's digesting the figures right now. And it seems like we're looking at the figures, it looks like interest rates are probably going to remain on hold. They're probably not going to need to go up anymore. And we heard Governor Bullock basically say last week, rates will be on hold until the end of the year at least, and then we might start to see some rate cuts, hopefully in the first quarter of 2025.
Ed, thank you. We'll stay in touch on those numbers. As you said, everyone trying to digest them at the moment.